Do you really know how healthy your business is, or are you just crossing your fingers and hoping for the best? Let me let you in on a little secret, okay? One of the best tools for understanding your business's health is a profit and loss statement, or also known as a P&L for short. Now, this is the perfect time of year for this video because I'm filming it at the end of December, and you're going to need this to begin, putting your P&L together, especially for tax preparation time. Hi, I'm Coach Tasha, and in today's video, we're breaking down the P&L statement. All right, I'm going to show you exactly how to read one and also let you in on some key financial metrics that you should focus on. And also, basically how to use it to make smarter business decisions. Now, by the end of this video, I believe you're going to feel more confident in tracking your revenue and your expenses and your profits. I think you're going to feel more like a pro, okay? All right. What is a profit and loss statement? A profit and loss statement, also called an income statement, is a financial report that shows your business's revenue, expenses, and profits over a specific period of time, sometimes quarterly, monthly, but especially annually, okay? You want to think of it as the story of your business's financial performance, excuse me, what you're earning, what you're spending, and most importantly, what are you keeping, right? Okay. Why does this even matter? Well, first of all, whether you're running a side hustle or a full-time business, your P&L tells you if you're moving in the right direction financially. It's also essential if you're looking for funding or loans, because banks and investors, they love these statements because it really gives them a clearer picture of your business. Now, you'll be able to produce this statement from your bookkeeping, but it's important that you understand each section, okay? And also, there's a lot of resources out there, guys. For bookkeeping, you have Xero, you have Wave, you have QuickBooks. And I'm also going to leave a link in my description box for my tax deduction tracker, which allows you to use Google Sheets, okay, to help you keep your financials organized. And it's also a great tool if you have like a low volume of transactions. Plus, I include an explainer video. Okay. Now, the first section in the P&L is your revenue. This is all the money your business earns, okay? There are actually two main types of revenue that you're going to see, right? You're going to see your gross revenue, which is the total income your business generates. Okay, this is before any deductions. But then you have your net revenue, which is the revenue after things like returns from orders, client refunds, or even like discounts. All right. Now, these items will be subtracted from your gross. And if you follow me on Instagram, I actually recently did a post explaining in more detail about gross revenue versus net revenue. Okay. Now, for example, if your business earned $10,000 last month, right? That's your gross revenue. But if you offered a $500 discount to a client, then your net revenue would be $9,500. Okay. In the next section, you're going to have your expenses, and these are where the costs of running your business are. Okay. They're usually broken into like three categories. Okay. Cost of goods sold, known as COGS. All right. Then you have direct costs, which are for producing your product and your service. Okay. For example, let's say if you're a coffee shop owner and you're paying for things like coffee beans, milk, cups, and things like that, all right? The other categories in this section of expenses are your operating expenses, things like your day-to-day business costs, like your rent, your utilities, even marketing, and other things, okay? Then you have other expenses, which are things like interest payments on your business loans or on credit cards. Also, certain taxes fall into this category, okay? An example would be like your state tax liabilities, which are deductible on a federal level, all right? Now, let's say if your coffee shop earned $10,000 in revenue and you spent $2,000 on coffee beans, $1,000 on rent, $500 on utilities. That brings your total expenses to $3,500. Now, the final section of your P&L is your net profit. This is the number everyone loves to see because it tells how much money your business actually keeps after all the bills are paid. Using our coffee shop example, if you made $10,000 in revenue and spent $3,500 in expenses, your net profit is $6,500. So the higher your net profit, the healthier your business is. But if your net profit is low or negative, that's a red flag, and it means it's time to dig deeper into your expenses. All right. Now that you know the basics, let's talk about the key metrics that you should be keeping track of, right? All right. Now, I suggest you grab a pen and paper because I'm going to give you a couple of formulas. All right. The first metric is your gross profit margin. This shows you how efficiently your business is producing goods and services. The formula is you want to take the gross revenue minus your COGS, cost of goods sold, divided by gross revenue. So if your gross revenue is $10,000 and cost of goods sold is $2,000, your gross profit margin is 80%. Another key metric is your operating margin. And you get this by taking the operating income and dividing it by your revenue. So if you're earning $10,000 and operating expenses are $4,000, your margin is 60%. Another key metric is your net profit margin, which is your overall profitability. This is calculated by taking your net profit and dividing it by your revenue. Okay, so in our example with the $6,500 in net profit and $10,000 in revenue, your margin is 65%. Now, these metrics help you see where your business is thriving and where it needs improvement. So, how can you use this information to grow your business? The first thing you're able to do with this information is to spot trends. You want to ask yourself things like, are my expenses creeping up? Is revenue staying flat? And tracking these trends monthly or quarterly will really help you to act before problems grow. Your P&L will also help you to cut costs. If you notice that your operating expenses are eating into your profits, you want to look for areas where you can trim, okay? Like unused subscriptions especially, okay? Your P&L will also help you to plan for growth. Your strong net profit margin means you might have room to reinvest, okay? Whether it's in your new equipment, hiring help, or launching new products. Now, let's quickly cover a few mistakes that you want to avoid. Mistake number one is you want to avoid mixing personal and business finances. You always want to keep these separate, and one easy way to do this is by having a business bank account. If you don't already have one, I'm going to leave a link in my description box for an online bank that I highly recommend. But yes, keeping these transactions separate is key. Another mistake is ignoring small expenses. Believe it or not, subscriptions, supplies, and other various things, even apps, other minor costs really add up. So do not ignore them. Another mistake is not reviewing it regularly. Your P&L isn't a set it and forget it, okay? You really should be reviewing it monthly or at least quarterly to stay on track with things, all right? So that's what I have for you guys today. I don't really want to overwhelm you guys. A profit and loss statement is more than just numbers on a page. It's a powerful tool for understanding your business's health and planning for success. Now, please don't forget to like this video, subscribe to my channel, and let me know in the comments what's your favorite tool or app for tracking revenue and expenses. Okay? Bye for now, and I will see you at the corner of success.